Welcome back, everybody. Today, we're going to be looking into Jindal Steel and Power Limited's Q2 FY25 results. They're a pretty big player in Indian steel, handling everything from mining to making finished steel products. And they've actually been known for some really cool innovation, like being the first to use coal gasification for steel making in India. And you guys have sent us some really insightful questions about JSPL,
Yeah.
along with their press release, investor presentation, financials, and even some auditor reviews. So what we're going to try to do is untangle all of this information and figure out what story these numbers tell us about what it means for JSPL, and more importantly, what does it mean for you?
Yeah, it's like we've got a puzzle, right? And all the pieces are scattered all over these documents. But I think if we use your questions as a guide, we can kind of put it all together and get a clearer picture.
All right. Sounds good to me. So let's start with the headlines. JSPL's revenue for Q2 FY25 is 13,025 crore. That's down 8% from last year. And their profit after tax also took a hit, down 38% to 860 crore. Not exactly something to celebrate, huh?
Yeah, on the surface, those top-line numbers do look a little gloomy. But it is important to remember that the steel industry, it's a global roller coaster. And one thing that's interesting is that JSPL actually increased their steel production by 4% year over year, hitting 1.97 million tons. So they're making more steel, but their profits are down. Tells us there's more to the story here.
Yeah, it seems kind of counterintuitive.
Right.
They're producing more steel but making less money, and their sales figures even show a dip of 8%, down to 1.85 million tons. What is going on here?
Well, the global steel market is a big factor. China, a huge steel producer, has been experiencing a slowdown, and that leads to a lot more surplus production, which pushes down steel prices worldwide. It's almost like a ripple effect, Even if demand in India is strong, JSPL can't escape the impact of those international price pressures.
So they're caught in the middle of this global squeeze. Gotcha. But you would think lower costs might help them weather the storm, right?
No. Let's see. Iron ore prices, a key ingredient in steelmaking, they remain stable. However, the price of coking coal, it actually softened. And this is likely due to, again, those same global price trends we just talked about. So there is a bit of relief on the cost side, which could help offset some of that revenue pressure.
Okay, so a bit of a mixed bag then. Lower revenue because of all those global trends, but a little help from softening coking coal prices. But JSPL's not just sitting back, are they? Their presentation highlights some ambitious expansion plans.
You're absolutely right. They are making a significant investment in their future, particularly at their Angul facility in Odisha. Their capital expenditure for this quarter alone was a whopping 2,642 crore. And that's driven mainly by these expansion projects. It's a pretty bold move. It kind of shows their confidence in the long-term growth of the steel industry. But it also raises a big question. How are they funding all of this?
Yeah, especially with profits down. Are they taking on a ton of debt to fuel this expansion? Investors have got to be nervous.
Yeah. That's a valid concern. Their net debt did increase to 12,464 crore from Arrow's 10,462 crore in the previous quarter. But here's the thing. Their net debt to EBITDA ratio sits at 1.21x. Now, for those who aren't fluent in finance, that ratio basically measures a company's ability to pay off its debt using its earnings. And a ratio below 2 is generally considered pretty healthy. So JSPL seems to be managing their debt levels carefully, even as they invest a lot. It's like they're walking a tightrope, but so far the balance seems pretty good.
All right, so they're borrowing money, but keeping it in check relative to their earnings. It's a delicate balance, for sure. But beyond just getting bigger, how is JSPL positioning itself for future success?
Well, one of their key strategies is shifting towards what are called higher value steel products. These are specialized types of steel used in things like infrastructure, shipbuilding, renewable energy, even defense. Think of it this way. Basic steel is like the flour you use for everyday baking. Higher value steel is like the artisanal bread you get at a fancy bakery. It commands a higher price because it's specialized and in demand.
Okay, I like that. So less of the everyday steel, more of the premium stuff. That makes sense, especially with India investing so much in infrastructure. But is it actually working?
Well, their numbers suggest it is. Their share of value-added steel sales hit 40% this quarter, their highest ever. And this shows a pretty deliberate move towards those sectors with potentially higher profit margins. It's a bet on the future, and it seems to be paying off, at least in terms of sales.
That's pretty fascinating. So it seems like JSPL is playing a long game here, betting on the growth of all these specialized sectors. But what about the average person? How does all of JSPL's performance affect them?
That's a great question, and it's one we should always be asking. Because JSPL's performance can actually tell us a lot about the health of the Indian economy overall. You see, steel is a fundamental material. It's in everything: construction, infrastructure, manufacturing, consumer goods. So if JSPL is doing well, it could be a sign of positive things. For things like job creation, economic growth in India, and that, of course, has a ripple effect on everyone.
Like a chain reaction. JSPL's success could mean more jobs, a stronger economy, and ultimately a better quality of life for people in India. It's interesting how these seemingly dry financial figures can actually tell such a multifaceted story,
It
right?
really can. And we haven't even gone to some of the more surprising details hidden within these documents. Did you know that JSPL is actually expanding their retail presence?
Really? I always thought of them as this massive industrial giant. Tell me more about this.
Well, it looks like they're building a pretty significant retail network across India. We're talking like a growing dealer network, experience centers, even an influencer network of over 34,000 people. They're also introducing new products, things like hollow sections, specifically for the retail market. It's almost like they're trying to reach everyone, from big corporations down to individual homeowners.
Wow, that's a really bold move. It's like
Yeah.
they're trying to become a household name, not just a steel-making giant. It really does speak to their ambition and their confidence in that future of steel demand. But shifting gears a bit, their presentation also highlights their social impact initiatives. Can you tell us a little bit more about those?
Yeah, it seems that their commitment to social responsibility goes way beyond just, good PR. JSPL has a foundation that's involved in a whole range of initiatives, everything from education and healthcare to skill development and women's empowerment. They highlight things like providing a mobile veterinary ambulance, constructing new hospitals, supporting tuberculosis patients with nutrition, and empowering women through microenterprises.
That is really impressive to see a company invest not only in profits, but also in the well-being of their communities. It really is a sign that they're thinking about the long term, about the sustainable future of their business and the people that they impact.
It's a pretty holistic approach, and it is becoming more and more important for companies to show their commitment to social and environmental responsibility.
So far we've uncovered kind of a complex picture of JSPO. They're facing a lot of global challenges, but they're also making these bold moves to adapt and grow. They're investing a lot, managing their debt carefully, and shifting towards higher value products, all while maintaining this commitment to social impact. I feel like this is just the tip of the iceberg, though. Is there anything else from these documents that particularly stood out to you?
There is one more thing I think is worth highlighting. GSPL has actually received quite a few awards for their sustainability efforts, particularly their water conservation and management programs. And this is a pretty significant achievement, and it's something that investors and consumers alike are really starting to pay more attention to.
Yeah, absolutely. Sustainability is definitely becoming more and more important, not just for the environment, but for a company's reputation and their long-term success. It seems like JSPL is really taking a comprehensive approach. They're striving to excel not just in financial performance, but in their social and environmental impact as well. But now, let's really dive deep into their financial health and see how they're managing this complex balancing act.
Okay, so now let's roll up our sleeves and dig into JSPL's financials. It's like we're examining the engine of this powerful machine. We can actually see how they're managing their resources and how they're navigating this tricky market.
All right, I'm ready to get my hands dirty. What are the key pieces of this financial puzzle that stand out to you?
Let's start with their cash flow. This tells us how much money is coming in and going out. JSPL generated 4,858 crore from operations in the first half of FY25. That's a pretty solid figure, especially considering all the challenges we just talked about, right?
So even with their profits down, they're still making a pretty good chunk of change from their core business.
Exactly. This is crucial because it gives them the flexibility to invest in those big expansion projects without having to rely completely on debt. Think of it like having a healthy savings account. It gives you a cushion and more options.
Yeah, that makes sense. But looking at their cash flow statement, their cash flow from investing activities is negative, significantly negative, around 5.4 billion for the first half of the year.
Right, and that's not necessarily a bad thing in this case. Remember all those impressive photos in the presentation? The new blast furnace, the coke oven battery, the massive slurry pipeline. Those are huge investments, and they show up as negative cash flow in this section because the money is going out to build these assets.
So it's like putting money into a long-term savings plan. You don't see the returns right away, but it's building towards the future. But those investments have to be funded somehow, right? And their cash and cash equivalents actually increased a bit from the beginning of the year. How is that possible?
That's where their financing activities come in. JSPL raised 1,214 crore through long-term borrowings and another 873 crore through short-term borrowings in the first half of FY25.
So it's like a mix of debt and cash from operations fueling these investments. They're playing a bit of a balancing game here, using debt strategically, but also generating cash from their existing business.
Exactly. And don't forget about that one-time gain they made from selling their treasury shares. These are shares the company held in itself. They sold them for a profit of 374.69 crore. It's kind of like selling an antique that you had tucked away in the attic. It's a nice little bonus that bolsters their financial position a little bit.
That's a helpful analogy. Now, let's move on to their balance sheet. This is like a snapshot of what they own, their assets, and what they owe, their liabilities. And their total assets are massive. 82,770.51 crore. That's a huge number.
Yeah.
What's the story behind all these assets?
Well, a big chunk, over 45,837 crore, is tied up in what's called property, plant, and equipment. This includes their factories, machinery, and all that other physical stuff they need to run their steelmaking operations. And then you have another 12,417 crore in capital work in progress. That's all those big projects under construction at Jindal.
So those are like works in progress. Assets that aren't generating income yet, but will contribute to JSPL's earnings once they're up and running. It's like building a new wing onto a factory, right? It costs money up front, but adds value down the road.
You got it. And let's not forget about their investments, totaling over 151 crore, and loans receivable amounting to 199 crore. These are assets that can generate income or be converted into cash.
It's a pretty diverse portfolio of assets. Some producing income now, some poised to do so in the future, but of course they also have liabilities, over 35 billion in total.
Right. Liabilities are a normal part of any business. JSPL's biggest liabilities are their borrowings, over 16 billion. And this is the money they've borrowed to fund those operations and, of course, those big expansion projects.
And debt can be a really powerful tool for growth, but it also comes with risk, right? Are there any red flags in their debt situation that we should be aware of?
That's where the auditor reports are really helpful. They give this independent assessment of JSPL's financial health. They do highlight some risks, but overall, no major alarm bells.
So they're taking on debt, but they seem to be managing it pretty carefully. But all of this financial maneuvering is ultimately in service of those ambitious expansion plans, right?
Yeah.
We've talked about all the numbers, but let's get into the specifics. What exactly are they building, and what's the timeline for all this to be completed?
Well, the heart of their expansion is at the Angle facility in Odisha. They're doubling the capacity of their blast furnace. That's where they turn iron ore into iron, a key step in steel making. They're also adding a brand new coke oven battery, which produces coke. That's another essential ingredient. And they're expanding their steel melting shop. That's where the real magic happens. Raw materials are melted and refined to create all those different types of steel. These are massive, massive undertakings.
It really is mind-boggling when you think about the sheer scale of these projects.
Yeah.
It's like they're building a whole new steel plant within an existing steel plant.
Yeah.
And then there's that incredible slurry pipeline stretching for 200 kilometers. What is that all about?
That pipeline is really a marvel of engineering. It's designed to transport iron ore from their mines to that Angle plant. And it's a much more efficient and environmentally friendly way to do it than trucking it. Instead of having all these massive trucks clogging up the roads, they're going to be pumping a slurry of iron ore through this dedicated pipeline. It really shows JSPL's commitment to innovation and sustainability.
Yeah, it sounds like something straight out of a sci-fi movie. So when is all of this going to be up and running and start adding to JSPL's bottom line?
Well, according to their investor presentation, they're expecting the blast furnace expansion and the new coke oven battery to be completed by the end of FY25. The slurry pipeline is also slated to be operational in the last quarter of FY25. But some of the other projects, like expanding their steel melting shop and adding a new plate mill, those will take a bit longer, probably stretching into FY27.
So it's a phased approach then, with some projects coming online sooner and others later. But it's very clear JSPL is playing the long game. These projects could really transform them into an even bigger force in the steel industry. But it's not just about size, is it? They're also focused on producing those higher value, specialized steel products that we talked about earlier.
Right, and a key part of that strategy is their investment in a new CRM complex. That stands for cold rolling mill.
Okay, for those of us who are not steel experts, what's so special about a cold rolling mill? What does it actually do, and why is JSPL investing in one?
Well, imagine you have a thick sheet of steel. A cold rolling mill takes that sheet and basically squeezes it between heavy rollers. It makes it thinner, stronger, and more precise. It's kind of like taking a lump of dough and rolling it out into this perfect thin crust for a pizza.
So it's not just about melting and shaping the steel, it's about refining it, adding value to it, and creating those specialized products.
Yeah.
How does this fit into JSPL's overall strategy?
These high-grade steel sheets from the cold rolling mill, they're used in all sorts of things. Automobiles, appliances, even those giant wind turbine towers you see in renewable energy. By investing in this CRM complex, JSPL is moving up the value chain. They're producing these more sophisticated steel products that command higher prices, and they're catering to those booming industries.
Well, it's all starting to connect now. From the financial maneuvering to these massive construction projects to this strategic shift in their product mix. JSPL is going through a pretty remarkable transformation. It's kind of like watching a caterpillar morph into a butterfly. Except, it involves a lot more steel and a lot less metamorphosis.
It's a pretty apt analogy. But as we analyze their financials and all those ambitious plans, it's really important to remember that JSPL's success is going to depend on their ability to execute these complex projects. On time, within budget, any slip-ups could have a pretty significant impact on their profitability and their future prospects.
Yeah, that makes total sense. So in part three, we're going to assess all those potential risks and opportunities associated with these ambitious plans, right? Because no investment comes without risk.
Absolutely. We'll also delve into all those external factors that could throw a wrench in JSPL's plans. Things like government policies, global economic hiccups, the unpredictable nature of commodity prices. Because as we've seen, the steel industry is kind of like a ship navigating a sometimes very stormy sea.
Okay, so we've covered a ton of ground here. Everything from JSPL's financial performance to their ambitious expansion plans and even their commitment to social impact. And it's clear they're not afraid to make these really bold moves. But just like any investment, there are always those risks that we have to consider. It's almost like they're navigating this really complex maze, and there are potential pitfalls around every single corner.
Yeah, you're absolutely right. No investment is risk-free. And GSPL's growth strategy, as exciting as it is, definitely comes with its own set of challenges. Think of it like climbing a mountain, right? The view from the top is incredible, but that journey, that can be pretty treacherous.
So let's talk about those potential pitfalls. What are the biggest risks investors should be aware of?
Well, I'd say one of the biggest ones is what we call execution risk. These are large-scale projects, like that blast furnace expansion, the coke oven battery. They're incredibly complex. You need meticulous planning, coordination, a lot of expertise. And any delays or cost overruns could really impact JSPL's profitability and their ability to manage all that debt we talked about.
Right, it's like building a house.
Yeah.
Even with the best blueprints and contractors, unexpected problems pop up, and you end up with delays and budget blowouts. And we've seen those things happen with these big industrial projects, even with experienced companies like JSPL.
Exactly. And then there's the cyclical nature of the steel industry. Global demand for steel can fluctuate a lot, depending on things like economic growth, infrastructure spending, even geopolitical events. It's like riding a roller coaster. There are going to be those ups and downs. And if demand weakens, JSPL could face some real pressure on prices, even with all that shiny new production capacity.
So even if they build it, no guarantee they'll come. They're still at the mercy of all those global forces.
That's the reality of operating in a global market. And then on top of that, you have the volatility of commodity prices. Iron ore, coking coal, those are essential ingredients for steelmaking. Their prices can swing wildly. It's like trying to bake a cake when the price of flour and sugar keeps changing. Makes it pretty tough to plan and predict your costs.
Right. And we can't forget about competition. The steel industry, it's a really tough business. There are players from all over the world, and they're all vying for that market share. JSPL has to stay ahead of the curve. They have to be constantly innovating and improving just to remain competitive.
Absolutely. It's a race. They can't afford to fall behind. And then there's always the risk of those regulatory and policy changes. The steel industry is often subject to government regulations, tariffs, environmental policies, and all of those can shift, sometimes unexpectedly. It creates uncertainty, and it can impact JSPL's operations. It's like playing a game where the rules can change at any moment. You have to be adaptable and really quick on your feet.
So it sounds like JSPL is facing a whole gauntlet of challenges here. But surely there are also some significant opportunities ahead.
Oh, without a doubt. Their focus on those high-value, specialized steel products, that's a really smart move. It aligns them with all these growth sectors: infrastructure, renewable energy, defense. These are industries that are expected to see continued growth for years to come. And as India invests in these areas, JSPL is really well positioned to capitalize on all that demand.
It's like they're surfing a wave of growth, riding the momentum of all these expanding industries. And if India's economy keeps growing, well, JSPL is going to benefit big time.
Precisely. And if they can execute those expansion plans successfully, they'll be able to grab an even bigger slice of that growing market. And their commitment to sustainability, that's a huge opportunity too. As environmental regulations become stricter, JSPL's investments in cleaner technology and processes could give them a real competitive edge.
Right? It's like being the only bakery in town that uses all organic ingredients. You might have to charge a little bit more, but there's a growing segment of customers who are willing to pay for that.
Huh.
And let's not forget their retail expansion either. Tapping into that individual customer base, building that brand loyalty, that could be a game changer for them. It's like adding this whole new revenue stream to their business.
It is a bold move, and it will be interesting to see how that plays out. But ultimately, JSPL's success, it's all going to depend on how well they can manage those risks that we talked about
Hmm.
and how well they can capitalize on all these exciting opportunities. It's a delicate balancing act.
So as we wrap up this deep dive into JSPL, what's the key takeaway for our listeners today? What should they be watching for in the coming quarters?
Well, I think the main thing is to keep a close eye on how they execute those expansion plans. Are they staying on schedule? Are they staying within budget? Are they managing that debt effectively? And are they able to adapt to those ever-changing global market conditions? And don't underestimate the importance of their sustainability initiatives either. That's becoming a key differentiator in today's market.
It is a lot to track. But I think this deep dive has given our listeners the knowledge to make informed decisions, whether they're investors, industry watchers, or just curious about how a company like JSPL works.
Absolutely. JSPL is a company in transition, balancing those risks and opportunities as they move into the future. Their story is really a fascinating microcosm of India's own economic journey, filled with challenges, ambitions, and the potential for some really remarkable growth.
It really has been a fascinating journey exploring their world. We've learned about their financial performance, their ambitious expansion plans, their commitment to sustainability, and even their little foray into that retail market. It's been great.
Yeah, we've seen how they're grappling with all those global market forces, how they're managing their debt, and how they're investing heavily in their future. JSPL is a company that's not afraid to take risks and innovate, and it will be very interesting to see how their story unfolds in the coming years.
So I think this deep dive has given us a really good look into the world of the steel industry and all the challenges and opportunities that lie ahead for companies like JSPL.
And remember, the world of steel, it's constantly evolving. Stay curious, keep learning, and who knows, maybe we'll revisit JSPL in a future deep dive and see how they've navigated all the twists and turns of this dynamic industry.
Until then, keep those financial statements handy, your eyes on the horizon, and your minds open to the possibilities. The world of business is always full of surprises,